what happened, right, after all-time highs, right? Market goes up,
Mhm.
up, 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 up. Sometimes you have a down day. All of those are going to look kind of the same immediately of it went up, and then you had a little kink down, and just looking at what happened after that first down day off of an all-time high. We're going to investigate historically.
Awesome.
Cool.
Because I think a lot of people are sort of wondering about how panicked to be in this moment.
Okay, let's see.
And the answer is that it's a little hard to say because this one is really extreme.
Okay.
But we'll look at more generally. So when the market's been sitting at new all-time highs every day, any down move can really throw you for a loop. But every bull market has a down day every once in a while. So there's a big question in everyone's mind of, is this just a little kink before it keeps going back up, or is it really the beginning of a crash? And so reality, there's no way to detect if it's the difference between the two, but we're going to look at the history to see sort of what these sort of events have looked like in the past and have an idea about.
If you can answer this question, I think you will win a Pulitzer Prize. So let's see if what goes on.
Yeah, I mean, it is impossible. I believe it is actually impossible to distinguish, but you can at least say what has happened in the past.
Sure, totally agree.
Right, to be probabilistically prepared, even if you don't know.
Yep.
Right, we don't know if this one is which category this one falls into, but we can look at how often each of the times that things like this have happened have fallen into which categories.
Understood.
Perfect. So let's look at the study. So we're going to use 30 years of closing price data on the SPY because it's the oldest ETF there is. It's the only one we have 30 years of data for. And looking at every time there was a date that was an all-time high and then had a down day the next day, which makes 323 total occurrences that this has happened over the 30 years, about 10 of them a year. It's not that crazy. And we're going to look at sort of both how long it took it to eventually bounce back to that all-time high, how far it fell during that period, where the minimum it reached, and how long it took to reach that minimum, right, where the minimum fell in that time span. That's actually one of the more interesting statistics, I think. And then I'm going to break these up into also looking for the ones where the down day was large, because a lot of these are like it lost a penny one day and that didn't matter. So if we look at ones where it actually moved down at least 0.5%, that's 86 of them. At least a full percent is 20. And then here's the real rub, is that at least 1.5% is only 8 times, which includes Monday or whatever that was, Tuesday when it happened this week. So that's only 8 occurrences, so it's not going to get us particularly good data out of it. But we'll look at what the numbers say on those 8 times also.
Beautiful.
So in the overall, it's most of them are those times where it went down a penny and kept going back up the next day, right? It took about 1 to 2.5 days for it to reestablish its all-time high. It only went down, a small fraction of a percent in total, and it really only took a day or two. It's not that big a deal. Right, most of them are really nothings, is the answer. So I think we really want to focus in on the big ones because that's sort of what we're going through right now. So let's look at the bigger ones. Above the 1% and the 0.5% will have good data. The 1.5% is pretty exceptional, so we're not going to have a lot to say about this week's events.
So you're saying the mini dips, you buy them.
You just don't even need to notice them.
You don't even have to notice them. But if you're trading and you see a little tiny little dip, it's a buy the dip.
It's probably a recovery. Yeah, those tend to recover pretty quickly.
Okay.
If you've been on a massive up tear and you have a little down, those tend to recover very quickly. Historically.
Right, but you never know if the little down is going to be a big down someday, right?
Well, the big down the next day. But what we did have, like on Tuesday, we didn't just have a little down. We had a big down in one day.
That's true.
So we're going to look at those sort of more closely on the next couple slides.
Okay.
Cool.
Let's look. So these are ones where it's at least 0.5% down in its first down day off of an all-time high. And here we see it is significantly longer, right? It's more like 5 to 10 days to get over it. And then in the 90th percentile, we start seeing some real bad ones, right? These are where those really exceptionally large falls are coming in, right? Those take, right, sometimes months and months to recover and like gave up a large percentage of its value. But here's a thing to note, in which we'll see also in the later slides, that while it took 140 days on 90th percentiles to recover, it reached its minimum relatively quickly, right? Just 20 days after the first down move. So like a lot of the down move happens very fast, and then this is something we've seen in the market a number of times, that down moves are fast and then ups are slow and grinding. So when we do these like falling off of all-time highs, if it does go down far, it tends to go down far quickly and then grind back up slowly. Right, that's what the fall time being so much shorter than the recovered time means. It means that it went down pretty fast and then went up pretty slowly, but it made it back up. In everything except for Tuesday's down move. All other instances, it hasn't recovered since. We'll see if we ever
Makes
recover from
sense.
Tuesday.
No way, never. This is the end, Jacob.
It's the end. It's all over.
Get to the bunker.
It's, yeah, everyone go home. We're done here. No, but let's look at we'll refine a little bit further. We'll go into the 1% days. So here it goes up even further, right? 12 days, 20 days, as how long these things lasted. And like 12 fall distances are now pretty macroscopic, 3%, 5%, not 1/4%. And again, you get the same thing. It takes about 1/3 of the time to fall, basically about twice as long on the way back up as it did on the way down. It takes about a third of the way through its total fall time. Its total recovery time is the minimum point on average historically. And now we can look at the sort of the real outliers. These are the ones with the huge down moves to start us off of an all-time high. There's only 8 of them. Let's go forward.
So is it like 08, COVID?
Oh, you're right. I could in fact pull very quickly which of those dates are.
You think you might be able to with this outage? You might not be able to, but you could try.
I don't know if those were
February 4th, 1998, July 20th, 1998, November 27th, 1999, March 18, 1999, May 13, 2000, January 19th, 2020, September 2, and 2021, March 17. So no, not a 2008. Those were all, I guess, slow enough.
or not from all-time highs.
Right. They weren't off of all-time highs, or they were a smaller down day all at once.
Yeah. Okay. All right.
But of those dates, it did take them, right? I don't have a 90th percentile because 90th percentile out of 8 entries isn't anything.
Yeah.
Yes. Right. Yeah.
But even on averages, those took them about a month to recover, and their fall distances were rather large. So we should expect, right? Historically, 8's not a lot of data points to draw a line from, but if this one is like those ones, we expect this to last us about a month.
Beautiful.
That's
good.
That's what I got.
We have hope.
We have hope. Be braced, because there's no promises that it will, but historically, on average, these things have taken about a month to recover.
Beautiful.
Even when the market is setting records, down days can happen. The vast majority of these were quickly erased by bull moves, right? This is in the overall down days, most of them were like a penny, a couple pennies down, and then the next day was back up. But this doesn't mean that we should be complacent, right? Every crash starts somewhere, but you need to remain calm when the market does a downturn. So there's no way to tell how persistent a downturn might be, as Tony has been carefully warning us, and is absolutely correct. And so the only things you can really do are maintain appropriate position sizing and stay mechanical. And it can be really hard to do when the market's up every day. But here's the reminder about why we do that, why we don't just keep committing more and more. And it's because things change.